XRP ready for new Fed liquidity. We're going to be breaking down in today's update why we are very close to the bottom of the crypto bear market. And I think that you have an incredible opportunity to be scooping up assets like XRP and others very close to the bear market lows that we're setting in right now, and why you need to be doing so in anticipation of the new liquidity coming from the Federal Reserve and our Treasury Department in tandem, now working together with the upcoming and newly chosen Fed chair talking about a new Fed Treasury Accord. And the last time we saw this was when the Fed conducted yield curve control after World War II. And what this means for markets is exactly what we're going to be breaking down in today's update. Now, why? Why is this being considered? Well, many reasons. We have countries around the world like China and others that are now dumping U.S. treasuries. We have such a historical fiscal debt problem and a ticking time bomb over there that also needs to be addressed. And as long as rates are held up here, elevated, we're spending over $1 trillion per year just on the interest on that debt. And this doesn't even account for the over 160 trillion of unfunded liabilities that we have. This is bigger than that 30 trillion debt number, quickly approaching 40 trillion of the U.S. national debt. It's much bigger than that. But we got news out of China that they have instructed banks to begin selling and limit purchases of U.S. government bonds amid concerns that the U.S. debt may expose banks to sharp swings. And so we're getting word from not just China, but other countries as well, too, that they're going to be offloading U.S. treasuries. And they cite general concerns, but we know that there's a much bigger concern underneath that simple generic headline that they're putting out there. And so who's showing up? The Fed is set for a major liquidity injection today. The Federal Reserve will inject $8.3 billion into markets. This post was put out yesterday, so that's why you're seeing tomorrow. But this is going to take place today. $8.3 billion into markets today at 9 a.m. Eastern, marking the largest single operation within its bigger $53.5 billion liquidity plan. Now note that this is just liquidity from the Fed. This doesn't include the Treasury that's also stepping up to the table, and they've been buying short duration bonds as well. Now, the market initially didn't like the pick of Kevin Warsh as the new Fed chair because he historically was against quantitative easing after the great financial crisis. And so folks were saying he might not be the big dove that's going to work hand in hand with President Trump to really juice our markets. And this led to a massive historical sell-off in gold and silver, wiping out about 8 to 10 trillion in their market cap. And then obviously crypto was brought down February 5th, this last Thursday, was the lows that we just set. Bitcoin to 60,000, XRP to $1.11. But we now have Kevin Warsh calling for a new Fed Treasury Accord. Take a look at this. Is Kevin Warsh about to flood markets with liquidity or trigger a bond market crisis? The upcoming Fed chair, Kevin Warsh, has called for a new Fed Treasury Accord, basically a framework that would decide how the Fed and the U.S. Treasury work together on debt, money printing, and interest rates. Now, this goes back to a video that I did, a few years ago, talking about how President Trump was going to merge the Fed underneath the Treasury, and we've seen that. That process already started in 2020. I made that content in 2021. In 2022, we were talking about this. But then President Trump left. He stepped aside. Biden came in. And, we saw basically the Fed at that point raise rates at the fastest pace in history, rug pulling America. So the Fed was working against the American people by raising rates so quickly. But now we have Kevin Warsh, a Trump pick, coming in. And you're already starting to see the signs that he's going to be willing to work with President Trump. And they don't care about debasing the dollar. Just a couple weeks ago, President Trump was asked what he thought about the DXY, dollar index coming down, and he said, the dollar's doing terrific. This is great. I'm paraphrasing, but they don't care about sacrificing the dollar. They don't care about sacrificing the stock market. What they ultimately want to do, the objective, is to keep rates down and bring them down lower. Bring the rates down and keep them down so that we can pay back this debt with debased and devalued U.S. dollars. And no, you don't own enough hard assets or utility digital assets either. This is not only about rate cuts. Yes, markets expect Warsh to support rate cuts over time, possibly bringing rates down towards 2.75% or the 3% range. But the bigger story is what happens behind the scenes. Warsh has long argued that the Fed's massive balance sheet built through years of bond buying pulls the central bank too deep into government financing. So his plan could involve the Fed holding more short-term treasury bills instead of long-term bonds, a smaller overall balance sheet, limits on when large bond buying programs can happen, closer coordination with treasury on debt issuance. And this is where history matters because the US has already done something very similar before during World War II. Government debt exploded from about 48 billion to over 260 billion in just 6 years. To manage borrowing costs, the Fed stepped in and controlled interest rates directly. Short-term yields were fixed near 0.375%, and long-term yields were capped near 2.5%. If yields tried to rise, the Fed just printed money and bought bonds to push them back down. This policy is known as yield curve control. It helped the government borrow cheaply during the war, but it came with consequences. And just look at the macro and everything that we're at right now. I'm expecting the Iran strikes to be the catalyst to bring the bottom of the bear market in right now, right? We're in the middle. We're spending more on our interest on our debt than we are on our defense spending. This is when empires collapse or, at the very minimum, have to come up with a new plan. And this type of yield curve control, new Fed Treasury Accord, this is the response. Once wartime controls ended, though, inflation surged sharply. Real interest rates turned negative, and the Fed lost independence over monetary policy. By 1951, the system broke down, and the famous Treasury-Fed Accord ended yield caps. Now, fast forward to today, U.S. debt levels are again near World War II levels relative to the economy. Interest payments alone are approaching $1 trillion per year. Even a small drop in long-term yields would save the government tens of billions in financing costs. That fiscal pressure is why Warsh's proposal is getting so much attention. Other countries also tried something similar. This is what Japan did, right? The Japan carry trade that's unwinding right now is because they ran yield curve control from 2016 to 2024, and their interest rates were low for 3 decades before that. Its central bank ended up owning more than 50% of government bonds. Yields stayed low, but the yen weakened and bond market liquidity suffered. Once again, does President Trump care about the dollar being weakened? No. Australia tried a smaller version in 2020 to 2021. When inflation surged, they were forced into a messy exit that hurt central bank credibility. Across all these cases, the pattern was similar. Borrowing costs stayed low, liquidity stayed high. Currencies weakened, exits were difficult. If Warsh's framework leads to lower real yields, rate cuts, and easier liquidity conditions, that usually supports risk assets like equities, gold, and crypto. Because when bond returns fall, capital looks for higher return alternatives, but bonds themselves could face volatility. Less Fed support for long-term yields combined with heavy Treasury issuance could steepen the yield curve and push term premiums higher, and that's why this could become the most important structural shift in U.S. monetary policy since the 1940s yield curve control era. That's where we're at. And this is why I'm saying that XRP is ready for the new Fed liquidity, is because we've seen a rotation of institutional liquidity coming into crypto, and they're looking for good utility assets. They're not just throwing money around at meme coins like the retail speculators were for the past 5 years. And that's where XRP is so perfectly positioned. We've had steady inflows into the XRP ETFs, and then the XRP ledger itself is getting ready for institutional DeFi. And Ripple just laid out that DeFi roadmap. Brad Garlinghouse says right here, glad to see the message is finally even more clear. And that is the message of the focus on XRP. XRP family has and always will be top of mind for Ripple. He's retweeting Mr. Man XRP, who put this out here. And some of you thought that Ripple wasn't true to their word as XRP as the bridge asset. The vision has not changed. The direction remains aligned. CoinDesk. Ripple outlines institutional DeFi blueprint for XRPL with compliance-focused infrastructure positioning XRP as settlement and the bridge asset. And so this is the biggest monetary structural shift. We've seen how this has played out historically, but now you have a new asset class to take advantage of what was a historical rise in equities and gold after that moment. Well, now you get to add in digital assets right alongside that which will outperform both precious metals and equities. And I want you guys to look at the best performers after the Trump election victory. It was XRP, it was XLM, it was HBAR. These are going to be the best performers again. That rally that we had that was short-lived, right? Our 2025 bull run fell short. It sucked, right? I was wrong about how high things were going to go. Everybody in crypto was wrong about how high things were going to go. Stop focusing on that. What we need to focus on now is, what are you accumulating? How low can you go as far as accumulating these assets at the bottom of the bear market before they flip the switch and they juice these markets into midterms like never before? You know, we're watching it. And let's go to the markets right now so I can show you exactly what I'm talking about. We see right here on the DXY dollar index, what did we do today? We're printing a massive red candle. President Trump doesn't care about sacrificing the dollar or the stock market. But in the short term here, stock market is rallying 50,000 Dow. President Trump says 100,000 Dow by the end of his term. Okay, so I am expecting a drawdown in these markets when we strike Iran. NASDAQ 100, it's continuing on the rally that we had Friday, continuing up here, right? Same thing on the S&P 500, the rally extends. Russell 2000, and that's the indicator for our crypto market. When we see a broadening out of stock market, not just in the top Meg 7, the AI stocks, but the Russell 2000 index, which is the small caps, that's historically when we've always seen crypto go. Well, by the way, look at that breakdown of the ISM Purchasing Managers Index in the massive print that we got into expansion for the month of January. That's another leading indicator of what happens next. Gold, back above 5,000. For those of you guys that thought that gold was done, no. What I just broke down in this episode is why gold goes to 10,000. It's why silver is going to go to $200 to $300. Silver back above 83. Now we rotate over to crypto. Crypto still consolidating, but I want you guys to understand that we're near the bottom. So get your orders in now. It's going to come and go very quickly. I'm expecting one more bottom. Look at the levels. For those of you guys trying to determine where to place your orders, look at the levels that we went down to. Place some orders right above it. Place some orders right at it. Place some orders right below it if you're trying to get as close as you can to the bottom. You want to place some stink bids down at 50,000 Bitcoin, down at 90 cent or $1 XRP, then that's, have at it. But just know that we have a CME gap here on Bitcoin up at 84,000. Just know that we have a CME gap on XRP up here at $1.74. On top of this order block right here, right below $2. On top of this order block right up here, right at $3. We've wiped out all order blocks to the downside. We're done moving to the downside for the most part. And so for XRP, the example would be set orders at $1.20, set orders at $1.10, stink bids at $1.90. And I already told you guys where I set my orders. So I'll just say it again. I have a buy order at $1.07 because I'm front running $1. I'm not trying to time the bottom perfectly. I'm just going to take advantage and win on the margin. We don't need to hit the bottom perfectly. Win on the margin. And if you guys are looking for a platform to do so in your IRA, get your retirement funds invested in crypto, I think now is going to be a great opportunity to make that rotation, take profit on stocks, roll it on into the crypto market that's been lagging. New all-time highs for the S&P 500, for the Russell 2000, for the NASDAQ 100. Crypto's about to have its moment too. And when we really get the juice from the Fed, the Treasury, and then we get that broadening expansion, U.S. economy comes back, and we just got that indicator from the ISM Purchasing Managers Index going back into expansion, which is correlated with every crypto bull run. But Johnny Pants 69 wants to comment down below and tell us that it's a bear market. Zach, you suck, and crypto's dead. Pick your fighter. The largest institutions in the world, Johnny Pants 69 with the negative comment. I Trust Capital has us covered, though. If you're looking to roll it over, your retirement funds into digital assets or precious metals, use my link down below to get a $100 funding bonus. They have the premium custody account, which is the non-retirement account product that they have available for you. Or I love, and the reason why we partnered up with them is because they're allowing us to get our community exposed to cryptocurrency and precious metals through their retirement funds. Absolutely love to see it. We have them linked up down below. use my link to get your $100 funding bonus. And if you appreciate what we do here every single day, help us out by liking this video, sharing it out far and wide, and I will see you guys in the next one. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.